Are investors rational? This brings us to subject of rationality. The EMH assumes that investors as a group will act rationally. In its more recent version, it is also assuming that there are irrational participants called noise players in marketplace. When noise players who drive prices away from intrinsic value are not counteracted by arbitrageurs who are called informed players, then the market is considered as irrational. Behavioral finance and technical analysis. Behavioral finance is a quickly growing subfield of finance discipline. This branch of inquiry focuses on social and emotional factors to understand investor decision making. Behavioral finance studies have pointed to cognitive biases such as mental accounting, framing, and overconfidence, which impact investors' decisions. These studies suggest that investors act irrationally at times and can drive prices away from EMH true value. The evidence presented by behavioral finance supports the use of technical analysis. However, behavioral finance lacks the theory to explain why observations seen occur. Without such a theory, the academic world has been slow to let go of its adherence to EMH. Like any practical discipline, especially one working with an indefinite and fickle subject, such as the marketplace, technical analysis has problems. The random walk hypothesis is not perfect, yet at many times prices appear to behave randomly. The EMH has many holes that cannot be explained, yet prices seem to be very efficient and possibility of profit often slim. Fundamental analysis has its problems, most of which were exaggerated during the market decline. But there is a little question that stock prices, commodity prices, and currency rates change over the long run due to fundamental changes in the economy and structure of markets. Technical analysis is no different. It has many flaws, is difficult to learn, is subject to errors and bias, and often falls on its face. Nevertheless, technical analysis can be extremely useful to investors wanting to profit from timing and trend riding while limiting risk.